Hi, I'm Nolan Watson, President and CEO of Sandstorm Gold Royalties. For those of you who don't know us, we're a gold streaming and royalty company. We're one of the sixth largest in the world. We're in that sort of mid-tier section. And we've been building this company for a long period of time. I'm one of the founders of it. And we built a pretty impressive company with lots of growth in it and lots of cash flow. And it's a fun story to tell now.
Growth and cash flow. Two of my favorite words, phrases. Right, you're here at the conference telling a story. I wanted to kind of dig in a little bit as to what you're saying. It's been a tough 4 or 5 years. Your shares moving sideways, not too much interest across the board. What's going to change?
Well, things have changed. 2 years ago, we made a big, bold bet. We bought over $1 billion worth of things. We took on a bunch of debt to do it. And that made people scared in this scenario where interest rates were going up dramatically and people started getting scared about companies that had debt. But I'm a big believer. I've been doing streams and royalties now for 20 years. I'm a big believer that you need to buy things when nobody cares about growth. And then when all of your shareholders are banging on the door for growth, that's when you should not be buying things, because that's when they're very expensive and that's where everyone else is competing and driving down costs of capital. And so we took a big bet, counter-cyclical, bought some amazing long-term assets that are going into construction now and are being built. Our production is going to double over the next 5 years because of those bets. We've paid our debt down in half over the last 2 years. So all of a sudden, we are now a company that has all of the growth. We've already bought it. We paid for half of it. We're going to get our debt to zero and just watch growth happen. So the share price has already started to re-rate. I mean, we were $5 and something cents Canadian back in February. Today we're $8 and something cents. So that re-rating is in the process of happening now.
Right, yeah, nice positive gold environment. That really, really helps.
That definitely helps, yeah.
But it feels like a bit more than that, because the setup was there, as you were sort of alluding to there, with the types of deals that you've got on board. You do have quite a few deals stacked there, but in terms of the ones which are meaningful today and the ones that are meaningful and going to deliver what you say in the next 5 years, can you kind of point to those and give us an idea of what they're like?
Yeah, I think that's a really important thing to differentiate Sandstorm from the other streaming royalty companies' growth, is that the things that are in our guidance, when I talk about doubling our production from, call it 75,000 royalty ounces today to over 150,000 royalty ounces, I'm only talking about 5 things. We have a whole bunch of other development projects that are not in our production profile, that are not in that growth, because we don't know when they're going to happen. We don't know when the operator is going to be able to raise the money. So it's literally only 5 things that are in that. And one is Greenstone being finished by Equinox and ramping up. They've already poured first gold. It's a multi-billion-dollar mining company commissioning that mine. That's definitely gone ahead, going ahead. It's Platreef. So Ivanhoe Mines is building Platreef mine. We have a very large gold stream on that. And as they build that, it's one of the biggest, best companies in mining in the world. Then Barrick, they have their Robertson mine. We've got a royalty on that. And then SSR has the Hod Maden mine, and we don't know exactly when, but we think towards the end of next year they're going to go into construction on that. It's a relatively simple mine to build. It's a short mine life. And then the last one, Glencore has their Mara project, and we've got the ops. That's the only one we haven't paid for. We'll pay $225 million to get a 20% gold stream on that. It's a big copper mine. Their plan is to build it at some time. Their CEO, Gary Nagel, just came out on their last quarterly call and said, this is a mine we are going to build. And we're already putting hundreds of millions of dollars of pre-construction capital into it to get it ready to build. So those 5 things, all you have to do is wrap your head around those 5 things, then our production will more than double.
Right, which takes us from where to where in dollar terms? Yeah,
so when those 5 things happen at, pick a gold price. At today's gold price, that would be just shy of $300 million US a year of free cash flow. Not bad. And our market cap's $1.8 billion. So if and when we get there, that would be, at today's share price, we'd be trading at 6 times cash flow for very long life mines in a streaming royalty company in precious metals. It's a good place to be.
It's a good place to be. And come back to the debt, sorry, before we move on. What are we sitting at now? How much you got?
Yeah, so we're expecting to end this year with only $350 million of debt. Our debt was $640 million. By the end of this year, it'll be $350. And again, if you compare that debt level to what our cash flow can become, I mean, that's 1 turn of cash flow.
And what is the revenue today? The cash flow, I should say.
Yeah, so our EBITDA is about $150 million this year. We're projecting $160 million a year of EBITDA next year.
Right, okay, so you look to pay down that debt in the next 3 years?
Yep, by 3 years it should be 0.
Okay, fantastic. And then it really is a case of the money's coming in. And what you big guys tend to get accused of is planting money straight back in the ground for getting that shareholders, right? So we've got share growth appreciation, and that's a question kind of market values. You got the, you got dividend question and the amounts that you give back to shareholders as well within the remit here. So in fact, let's deal with that first of all. Okay, the dividend thing. What are you paying? What will you be paying?
So we currently pay a 1% yield.
Yeah,
it's 8 cents a share Canadian per year, and every December we reevaluate that decision. But right now our capital allocation plans is as much money to get debt down as possible, because that was a reason we heard as to why people were buying Sandstorm, and we now know that we're getting such a positive response that our debt is down. We just want to keep that trend going.
Okay.
So we don't plan on increasing the dividend that much now. Once we get to nothing in terms of debt, we're probably going to prioritize share buybacks. Our view of what our internal NAV is much higher than where our share price is today. And if our share price goes way up, that's when you look at dividends.
Right, okay. 1% doesn't seem very much. Would you rather just pay down the debt? What's going to be the biggest effect? Would you feel that you need to because people expect it, even though it's only 1%?
Yeah, it doesn't move the needle. I mean, we're cash flowing so much. The debt is going to come down naturally, whether we pay that one. We're always going to pay a dividend. Our policy for dividend is it's going to be that number or it's going to go up. We never ask ourselves, is it going to go down? And it never will.
Okay. Let's say you've got a big portfolio, right? We've talked about the top 5 there. In terms of the kind of next tranche down and the next lot coming through, say within the next, again, we'll use your time frame of 5 years. Do you expect others to contribute, even if it's not in such a major way as those 5?
Yeah, we have a number of other things like Bayan Kundi in Mongolia. It's small. We've got something in Woodlawn in Australia that looks like it's coming online and is not in our guidance. And there's all these small things that do eventually add up. But we take a simplifying approach of only guiding things where they're large operators that have the money, and we know when it's going to come online, so that there's no risk to our guidance on the downside. So those things, when they happen, will just be small positive surprises.
So no more new purchases?
In the next year, no, I don't see us making any acquisitions. I think, in fact, I was at some meetings here, and one of our large investors just said, "Nolan, you promise you won't buy anything in the next year?" I'm like, "Yes, I promise."
Good. But I mean, those are the only options available to you. I mean, if in a way you didn't do another darned thing, you can't hold anything.
Well, if you look at it from my perspective, so I've lived debt-free my entire life until 2 years ago, and I've borrowed $3 million personally at variable interest rates to buy more Sandstorm shares, because I'm convinced Sandstorm shares can double or triple. And so I am very, very long Sandstorm. I'm thinking every moment of every day how to get the share price up. And if any action is going to be counteractive to that, like for example, if a really cool transaction came along, but we would have to raise more equity at these low prices to do it, I'm out. I'm not interested in that. We're not going to be raising any equity at all. We're not going to be diluting ourselves. In fact, recently we've been doing the opposite. We've just in the last couple of months, we bought back $6 million of our own shares in the market.
Right. I guess for half your audience, you're going to case of, well, it's like, first of all, say, it's do as I say as I do, or do as I say, that phrase. You put a lot of money in there, and you borrowed it to do that as well. But for half your audience, it's going to be, look, for the last 4 years or so, it's been out of your control. You may want to try to share it, but it's been out of your control. Are you saying that because of the setup, which is the portfolio of assets that you've got, because of the gold price, because of the environment that you're looking forward to, your economy, however you gauge these things, it will now step change. The difference will be from now. And that's for new investors.
Yeah, absolutely. I think never before in my career, in any job, working in any public company, have you been able to say, if I literally just do nothing, this doubles, both in production, and I expect share price to double as well. And the formula for me is just don't screw it up.
Right. And who are you talking to in sales? Because, I mean, what's your kind of register look like in terms of institutions?
No. Yeah, we've got a number of large institutional investors. One of our largest investors is obviously the ETFs. We're in the GDX, we're in the GDXJ. Orion Mine Finance owns some of our shares are around 10-15%. We've got one of our new investors that owned none of us last year, but is now bought on the open market 8% of us, is a group called Capital Group, and they're the largest small cap managers in the entire world. So we're starting to get some really big, chunky names on our register from really high-quality investors.
Okay. So they believe what you're saying.
Yeah.
We've just heard from you, for sure. Well, like, I mean, it's one of the simplest stories we've heard over the past couple of weeks. So your time has come. So good luck with it.
Thank you. Appreciate it.
And I look forward to seeing that rise that we all wish for.
Sounds good.
Okay.